Hello and welcome back. My name is Josh, and I wanted to go over today something that I think some people are aware of and some people aren't, but I think something that's super important is what is priced into the market. And I wanted to read from this post from Reddit that I think is it's pretty well known um, in the Wall Street Bets community, which I'm not a part of, but my friend is, and so he's always telling me. And so I wanted to read from this because I think it is somewhat relevant, or at least parts from it. So everything is priced in. That's the name of the post. Don't even ask the question. The answer is yes, it's priced in. Think Amazon will beat next year? That's already been priced in. You work at the drive-thru at McDonald's and found out that the burgers are made of human meat? Priced in. You think insiders don't know that? The market is all powerful, all encompassing, being that knows the very inner workings of our subconscious before you were even born. The very existence were priced in decades ago when the market was valuing Standard Oil's expected future earnings based on population growth that would lead to your birth, what age you would get a car, how many times you would drive your car every week, how many times you take the bus, etc., etc. I'll leave it for now. I'll read the end. It has been priced in, and don't ask such a stupid fucking question again. So this person clearly it's a shit post, which he says here, but you can clearly tell this person thinks everything's priced in. I don't 100% agree with him, but I do think that for the most part, most things are priced into the market. And I really want to explain this concept because it's really important. When a company grows 30%, the stock price, we don't know what way the stock price is going to go because it doesn't matter what actually happens to the growth rate. It matters how that differs from expectations. The market is driven by expectations and how it differs. So if a company is expecting 100% growth and it only grew 30%, the stock price is going to crash. And meanwhile, if the market was expecting 1% growth and it grows 30%, stock price is going to go up a ton. So it's all about expectations. So this is why we often see companies that are growth companies that have huge growth rates not doing so well lately. It's because we all knew they were great companies. We all knew they were going to grow. And so just because you grew or met expectations, that doesn't mean that you're necessarily going to continue to go up. And so I think this is something that a lot of people forget. And all they say is, look, the company grew 80%, the company grew 60%. That's great. What were we expecting? Again, if you beat expectations, if you're expecting 50% and you get 60%, that's amazing. But the biggest reason why a lot of companies have had huge drops lately, like I'll give an example of Peloton, which I discussed here. Um, they guided that a company gives guidance. Guidance is what we expect for next year. And a bit ago, they gave guidance of, oh, in 2022, we think we're going to go 5.4 to $5.8 billion in revenue. After some supply chain issues and some stuff, they changed their prediction. They said, hey, we're changing our guidance, and now we only think 4.4 to 4.8, so a full billion less. It's a pretty hefty cut, not quite 20%, but it's a pretty hefty cut in your projections. And that is one reason why the stock price has gotten hammered, is because they were changing the expectations. People were expecting one thing, and they got lower. The one thing Wall Street, and when I say Wall Street, I don't literally mean Wall Street, I'll say the markets, how about that? They hate is uncertainty. They hate uncertainty. They want to know what's going to happen because it's all about their expectations. And when they're not sure about their expectations, leads to wild, crazy things happening in the market. Which is why they would prefer to know the price is going to go down 1% for sure, or like your revenue is going to be cut 1%, then not be sure if the price is going to be cut 2% or be up 10%. The not knowing leads to uncertainty because they say, wow, if we can't trust our expectation or our numbers now, how do we project in the future, which leads to a much wider range, which leads to, again, more uncertainty. So really, they like to know exactly what's going on. And this is kind of what he's talking about, where everything is priced in. If you think the stock price is going to go up 30% because you know, oh, this company had the best selling toy in the country, then that's mostly priced in. Now again, there are other things that I think are not priced in. So one, there can be surprises, and in fact, I think that in this year we saw the least things priced in. Now, some people might say that's because retail reacts is much more reactionary to news, where something in the news happens and they go, "Oh my God, I better start changing." While the experts, using that in quotes, in the hedge fund world are trading on that news ahead of time. Again, I want to just outline the difference in knowledge bases. Some of the experts have access to cameras that will take pictures, satellite cameras that will take pictures of a Walmart parking lot on an hourly basis to understand traffic patterns to say, oh, how many people are going to Walmart? Oh, we see that some stores are lower, stuff like that. I saw an amazing video on YouTube about a company that does this for oil prices. So they measure, there's giant oil tankers and the oil, there's a thing that floats on top of the oil to prevent like evaporation or something. And they can measure the size of the shadow on that cover to, to use algorithms to say how much oil is in there so they can understand oil reserves and how much oil reserves there are around the world. This is high tech shit. And so that is what you're competing against. Now, again, they get it wrong all the time too. And that's the point, is the market is an average of everyone's opinion. So we have someone who's got expert data and they think this is going to happen. We have someone who's got different expert opinion who thinks something else. You have you and I who are just looking around and say, "Oh, I think this is doing well." And sometimes that can work out very well. You see at your local store, wow, this store, whatever it is blowing up. Everyone seems to love, or oh, all my friends are not on Zillow anymore. They like this new app. Maybe that's bad for Zillow. So the retail can often see things coming ahead of time, but it's because they have different data sets. And we combine the average of all these different people's expectations, and that becomes the market expectation. And that is what it's based on, really, is what is the market expectation and how does reality differ from that? So I do not agree with him that everything is priced in, but I think most things are priced in. And the reason I don't think everything's priced in is because, I think at one point there was basically one version of data. It was pretty easy. You had insiders who could buy data, and today there's a million sources of data. There's people that go on Google Trends and Twitter and read, and they can read real consumers what they're doing, and that's a different form of data than satellite cameras. But I really do think that understanding the trends and how people's um, ideals are shifting is uh, is not always priced in today because things move so much quicker today. Just as an example, if everything was priced in, why there were so many companies that they knew. Apple recently changed when I say recently, in the last year or so, changed their privacy policy. And so if you have an iPhone, suddenly brands can't track you across different devices as well. So they used to be able to connect, oh, this is Josh on his computer, this is Josh on his phone. Now, because of Apple's security thing, they can't do that as well. And a lot of companies like Facebook was warning this for like a year and a half, said, hey, this is going to hurt tracking, which could hurt the efficiency of people's ad spends. And yet, when it came out, like thousands of companies said, oh, our ROI on marketing was down. Whoops, it's because of the Apple thing, and yet it didn't seem to be priced in because everyone got dinged for it. Yeah, same with supply chain issues. We've known this for a while, and yet every time it happens, prices go down. So I really don't think everything is priced in, but I think most things are priced in. It's mostly priced in. I think that's because there are things that are uncertain and that we can't be certain of. And so things that if you think something that everyone knows, it's priced in. And that's, I think, the difference when it says everything's priced in. If you say, wow, this company is going to grow a shit ton, Tesla's amazing, that's priced in. Everyone knows Tesla's amazing. Everyone knows Tesla's going to grow. That's priced in. It's the surprises that aren't priced in. And again, it's the less certain something is, the less it's going to be priced in. And when something's not priced in, that's where you can also see huge jumps in the price. If you see both good and bad, if you aren't, people are worried about Alibaba because there is a real risk of delisting or China or something like that. That has significantly hurt the stock price to the downside. That was a risk that people were not thinking of and now are very aware of. If, again, you can't get rid of that risk, so there's not going to be an out. But let's say theoretically you could, or just China doing anything that could significantly move the market. Right now, no one really knows about what China's next move is going to be, and so that's not going to be priced in because no one knows it. So those are surprises. Surprises are never priced in and can move the market. You can see huge bumps. The best example actually might be biotech because if something passes or fails, it moves the market wildly. based on it, and no one knows whether it's going to pass or fail. If you do, then you have insider trading, but information. But the things that everyone knows, this is a game-changing drug. It passed, and it's going to work for tons of people. That's priced into the stock. So you have to look for where you think the market expectation differs for where you think reality is going. So if you think, hey, they think sales are going to be 4.4, I think they're going to be 4.6 because of this, that, then you have an edge. But if you think, oh, sales are going to grow 30%, that means the stock price should go up 30%. No. Look at what the analyst expectations are, and that's where it's really important. So companies that beat expectations are going to do well. Companies that do worse than expectations aren't going to do well, and that's what matters, not the actual results. It doesn't actually matter what the company actually does, it matters where their results are. I've actually seen companies have terrible quarters where revenue went down 15%, but they were expecting it to go down 20%, so the stock price goes up. That's really what it is, and that's really what you have to think about the stock market. In the short term, there's a phrase, in the short term, it's a voting machine, in the long term, it's a weighing machine. I really believe that. The weighing machine means at the end of the day, in the long term, it's all about the fundamentals. Did the company grow? What are you paying for the earnings? How much growth prospects do they have? Those are the important factors. How much money are you bringing in? In the short term, it's a voting machine. In other words, we all vote in what we think this company will do. Do we think it will go up? Do we think it will go down? What do we think growth is going to be? And so if it overperforms versus what the vote is, the average, it can move wildly. So again, that's really what you want to think about in the short term is how do I think which company has the most different future than is being expected right now? So try to find these undervalued companies, try to find companies that people think are dog shit or just not that good and you think are great, amazing companies. And again, when I say great, amazing company, I don't just mean revenue growth. It's also got to be a fundamental business. I've seen companies that grow a lot or have a great idea, but can they turn it into an actual business? And if they do have an actual business, is it just growing sales or is it growing profitably? So those are the companies though that will do the best, is the ones that have an amazing idea, have the execution to turn it into a business idea, and actually can turn that into like a cash generating business. Because again, you can have companies that generate revenue on paper, but if it's not turning into earnings, like again, sometimes you need to burn to grow. You got to burn to earn. But in the long term, you have to become a cash flow generating business. So thanks so much for watching. This has been, do you think everything is priced in? Or do you think the whole thing's full of shit? So I personally think most of it's priced in, but I often think that the markets are not as smart as they think because again, it's getting everyone's opinion. And some people are very conservative and are not looking towards the future, and other people are only looking towards the future and not looking at today. So I think there are often these lead to gaps in the market between the expectation and reality. Sometimes they're very short and these windows close. Bill Ackman actually made a huge bet and made a ton of money when in China, when coronavirus first started, he saw, hey, this could be bad. If this gets out, it could be terrible for the market. He bought a put, which basically, in case a stock price goes down, you make money when the stock price goes down. And obviously, there was the corona crash, and he made a ton of money on it. It's one of the greatest trades ever. He made billions of dollars on this. And that's because most people weren't expecting it. But now everyone kind of expects, oh, if there's another corona thing, then it could hurt the market, but we never know when it's going to happen. So again, look for these. There's sometimes small windows. They might be only a month or sometimes weeks where there's a discrepancy between what the market expects and what you expect. So that's my thoughts. Let me know your comments below. Thanks so much for watching and talk to you next time.